Hello, everyone. Welcome back once again to the KoreSummit webinar series, Blockchain Summit. So before we get started, Kiran and I sincerely want to apologize for last week. We were in one of the greatest cities in America, New York, and the internet didn't want to work. And we both happened to be in the same city at the same time. And boy, that was, I still can't believe that that happened. So want to apologize to everyone. I know that we're going to make it up to you. It will be included in our schedule coming up here in April, and so we can continue the discussion. And so, but again, we continue through. We're marching through. Today we got good internet access, and we're going to get into our topics here. But before we do, I just want to thank our sponsors. Nuvei, a great partner that is supporting the private capital markets, not just in the United States, but around the world, to make sure that offerings are done compliantly. They are operating in 100 plus countries around the world. We're really excited to have them on board. And of course, KoreChain, the first blockchain company that has gone through an SEC qualification process in order to tokenize securities. And today it's going to be myself, Oscar Jofre, co-founder and CEO of KoreChain, of course, and Dr. Kiran Garimella, which, as we all know, let's take a bow. It's good to see you. So, before we got on, Kiran was saying, so Oscar, I feel like we've done this before. And I go, Kiran, we have. We have spoken about tokenization and real estate before, and so why are we doing it again and again and again? And I'll put it this way for everyone, and it's really simple. Of all the elements of tokenization that people are talking about right now, because they're not talking about NFTs anymore because it's dead. Nobody's talking about CryptoKitties because it's dead. Nobody's talking about ICO because that died and buried, and some are getting arrested. But what is clear is that real estate seems to be at the forefront of everybody's mind. It's like, I read headlines, the game changer. It's going to revolutionize real estate. It's going to, for the very first time, you can fractionalize, real estate. So all these comments. So obviously, it's bringing massive awareness. That's one. But I would also say massive confusion. Because what it's actually doing, it's it makes people think, but the headlines are a little bit off. And today we're going to talk about real estate tokenization. We're going to talk about it in 3 different parts. We're not going to spend a lot of time in each area, but except for the last part, in order to make sure that it's really clear to everyone where the opportunities exist for tokenization in real estate. Is that fair, Kiran? I mean, I know you get bombarded in emails, and you're seeing LinkedIn as well. I don't know if you're seeing the same, but every email that I'm getting is tokenization real estate webinar, tokenization real estate. And just before we get started, I mean, I just want to hear your feedback on that.
Certainly. I mean, I think one of the big reasons why real estate is such a magnet for many people is that, I mean, traditionally, that's been one of the most favored forms of investment for everybody, right? I mean, even traditional retail investors, common Main Street person, people, they know that their investment in their home is their biggest equity or contribution to their net worth as they go forward, right? So that's always been in their radar. And now we are kind of looking at, the commercial real estate market is like an entirely different beast. And people are saying, how can I participate in something like that? I mean, I've got my home, but how do I participate in that? And traditionally, it's been a little bit difficult. It requires more sophistication. It's not as democratized as before, I think. So, I mean, you look at commercial real estate, that's almost like $25 trillion worth of money there, and residential is 40. I mean, together they're almost like $60 trillion within the United States itself, and globally it's even much bigger, of course. So that's the reason why I think why this is so it's on everybody's radar, and it's a huge magnet. Now they're kind of wondering, how do I actually get into this one? And I think that's kind of where some of the interest in blockchain tokenization, democratization, I think that's kind of what it's playing into.
Yeah, that's a very good point, and that is so true. The size of real estate market is in the trillions, and there's so many elements to it, whether it's commercial, residential, rental, all this. It offers, and I think that's why I think you're right. I think that's why everybody sees it as the opportunity. So today, what we're going to do, we're going to provide an enlightenment to real estate and tokenization, because I think it's extremely important. And I'm going to start it off, and Kiran and I are just going to go give you kind of an overview to make sure we're clear. So real estate is in one of those real interesting asset classes and opportunity that is regulated, not only regulated when you're raising capital, but it's also regulated when you're making the purchase. And that purchase is where we rely on that term that no matter what country you go to is called land titles. And land titles is usually an agency operated by the government in order to make sure that there are records for the ownership of that particular property that you are looking at. And so when people talk about tokenization, we're going to break it down into three pieces. So the first part is land titles. Could you tokenize land titles? Is there an opportunity for that? Now, let me ask you that. I mean, I believe there is. I think that's probably if there was ever a game changer, it's on that one. I'll just give everyone an example here. In Toronto, Ontario, Canada, this happened no more than 2-3 months ago. I'm sure it's happened in every city across America. I'm sure it's happened to everyone, but this one made the news, and that's why it caught my attention. A home was sold. A home was sold while the owners were away out of the country to new owners by fraudulent individuals and people. And I'll never, and again, I won't forget the article because it was written. And blockchain would solve this problem. And I agree. Their blockchain could have such an impact. But let's talk about that, the impact of tokenization in the land titles. Just provide us an overview how could that be transformative in the marketplace?
Absolutely. In fact, I'm reminded of the very old. It is a true story, by the way. Somebody actually sold the Brooklyn Bridge to some multimillionaire, and the way the scam came about was actually fantastic. If you read the story of how it actually happened, it's unbelievable. I know. So people do all this really, crazy things, and more importantly, there are people who fall for those crazy things too, right? But the whole land titles, I mean, this is a huge area. So if you look at a very advanced market, like such as the US, with very strong governance and regulation and laws, the possibility of these types of fraudulent things happening is somewhat minimized. This is obviously not true in many of the other countries, especially the Asian countries and the developing economies, where land title fraud is pretty rampant. And it's unbelievable. When I was a kid, and my mom was, she's a doctor, and we were buying properties in India. It's amazing that you have to go through a lot of hoops just to make sure that the titles were safe. I mean, there's no title insurance, there are no title search companies. That infrastructure did not exist, and even today it's kind of tough to make real use of that one. So it's amazing that we had to actually visit the seller's home and interview the neighbors and look at exactly what they were. So it's pretty interesting process that we had to go through. But the long and short is that, can blockchain really help in this aspect? And my feeling obviously is it's going to be a resounding yes, from the perspective of if you take a land title and it's a title to a property, so the correct mechanism for that one is going to be a non-fungible token. It's NFT. It represents one of a kind. And but once you do that and you put it on the chain, anybody can verify what it is, obviously based on the keys and so on, and it's there, right? Now, there's been a lot of buzz in the area in Florida because it's very There's a lot of real estate transactions going on here, and Florida, for some interesting reason, has been the hotbed of various NFT transactions. The first one happened, a few years ago, and then recently there have been more condos being sold in the Gulfport and Tampa areas, and it seems that many real estate agents actually favor this NFT. There are some, actually, believe it or not, who are specializing in using NFTs for real estate transactions, and I'm talking retail, residential, homes. Right? It's pretty interesting, and they're saying we actually like this because think of the blockchain as a proxy for the county title office, right? And definitely, I think they're seeing a lot of benefit to having that.
I think personally, watching what happened here in Canada, I think the reality is you can have all the safety nets. I mean,
Yep.
US and Canada are very similar in that fashion. The fact that the fraud can still be committed, it just goes to show you that there's a weakness in it. And the fact that somewhere along the line, a check was missed or something like that, where if you had this on the chain with a smart contract, it would never happen. And I think that's where, so again, tokenization for real estate land titles is that in the wheelhouse? The answer is 100% yes. What type of chain can you use? Can you use a private, permission, public, whatever the government chooses? Because in this scenario, I think this is an outsource solution that, and I'm not trying to discourage anybody building, but I've been approached by a few companies. I build a land title solution, great, and I want to get people to start using it. I want to be the land titles. This is not one of those things where you can be that.
Yeah.
Right? This is a regulated. This is where it's an agency. You could be a subset of it. No different than when you go to incorporate a company. You are an agent of the government in order to incorporate entities. This would be no different. But I think right now, when people are coming up with these solutions, it's really important for the audience to understand that it's a solution that needs to be driven by municipalities, governments, and all that, working with stakeholders, and in order to make a change, because that will trickle down to the next stage of tokenization, which often, again, it's the second part that comes up in all these discussions, which is, okay, so now I got this asset, and
Yep.
with blockchain, it's real time transparency where you can see the income, and all that. And I'm a big believer. I think first of all, I've spoken to real estate investors. They go, I'm not really sure what they mean by transparency because I see everything, I get everything. How it's being delivered, that's questionable. I mean, keep in mind that it's a very small group of investors up until recently. So, which means that as a group of investors keeps increasing in the ecosystem, allowing more investors, delivering that material to a large audience, I could see where blockchain could come in and making sure that records aren't being manipulated real time. So,
Yeah.
I do see the value in the next stage where you're managing the real estate asset. There's income coming in. It's
Yes.
automatically reporting to let's call the holders for now of that asset, so they can see it. What are your thoughts on that?
No, absolutely. But before we get into that one, there's an interesting question in the chat that I see that I want to address this. People think about, or at least the lay people think about tokens in the real estate as if they are one type of token, right? It's just a token, but that's not necessarily true. There are various ways of using blockchains in this entire space, and one of them obviously is the titles. And so to secure your property rights and to make sure it's pretty transparent and some crook cannot sell your home while you're away. All of these things are one type of application of a chain where you secure your property right on the chain by using a blockchain and a smart contract, right? But that's only one part of that. The other part is really fractional ownership in your real estate. And again, not everything can be fractionalized or should be fractionalized. Residential real estate, for example, if you want to hold a clear title to that as a complete entity, sure, then you have an NFT for that entire thing. Where does fractionalization come? Well, whenever you want to create subsets of the property and have different people have different amounts of shares. Traditionally, that's been thought about in the real estate market, but there's no reason to not have that even in residential homes, right? So suppose you are transferring your properties to your kids as inheritance, and you want to carve out shares in your residential property. And the only solution today was to give one property to one kid and the other property to the other kid, and then there'll be lots of fights about which one is worth more, or to sell it at the most inappropriate moment when it is really low, and then distribute the proceeds, or have your estate distribute the proceeds to the kids. But now we can actually have an owner create fractional shares in their residential property and make that part of the estate, and that can happen as well, right? So, so there are various ways in doing this.
Perfectly. Correct.
Yeah.
Correct. That's a good. I'm glad people are asking questions, because once in a while we can't think of all the things people are thinking about, and real estate brings a lot of different things. You got to think of the beneficiary owners, and you're thinking of your will. It's rather interesting now that you bring that up. I know we're going to get off a little bit, but I'm working with an entrepreneur who is working on a product called Willow, and Willow is going to be something that he's going to be putting on the chain. Why? Because the will what does the will have? Well, typically, as you just indicated, it indicates these are the holdings. These are the holdings, and it provides complete transparency, which, as we all know, sometimes siblings start to quibble and fight. It was meant this way. No, but there it is. It's undisputable. So I do see this when we start tokenizing or using blockchain technology to manage real estate through its entire life cycle. There are some really interesting spin-offs that are very positive and that's a perfect example you just gave when you're putting this in a will. It just boom. We keep thinking of scale.
And here are the important things to consider why this is so critical and important, right? So number one is that there is a huge generational transfer of wealth happening right now in the United States from the baby boomers, right? Starting from the years of 1963, 62, approximately until now, people who are born in the area are now retiring at the rate of almost about 10,000 people, 10,000 retirees per day, right? And most of them, for just about all of them, property, real estate is the biggest holder of wealth and net worth, right? And now you're looking at the generational transfer. This becomes all the more important, right? And as you go forward to secure this and make it a much more smoother and liquid market, I think the opportunities are going to be endless. And I think that's kind of where some of the more savvy commercial real estate folks, some of the savvy large realtor firms are looking at this. And this is the reason why I think there's some buzz with some real estates, realtors that I know of in my local area. I've been seeing some interviews and some surveys from them, and they're all saying, but they're coming at it from different angles right now, right? I mean, there's no one thing they gravitate to. You mentioned a great example, Oscar. People think about tokenization real estate as if you create the tokens, you buy them, and you hold them, and you're done. No, there's a whole management aspect of it. There's operations behind it, right? It's the distribution of rental incomes, for example. It's the expenses, all the visibility and transparency of specific expenses that the company is undergoing, so people can see that and validate and say, yeah, the net profit's going to make sense to me. There's nothing out of whack here, and they are distributing 90% of the net income. This is great. So the ability for people to see all of that and participate in that, I think that's invaluable.
It is, and that's really interesting. I mean, you're right. Typically, when it comes to tokenization, it's so focused on just the element of buying and selling and trading that we're not also looking at other values. Why people invest in real estate, right? Because we see it every day, right? We see it every day. People are investing in real estate for the dividend, or it's part of their retirement. This is part of their strategy. They're not looking at selling it; they're looking at holding it. And tokenization can still have a value without trading. I think that's one of the areas that I want to touch on. I think we put so much effort, not effort. We put so much emphasis that the reason for tokenization of real estate is to trade. It's this thing that immediately to trade. And so I've been querying investors in real estate. Are you that eager to trade this? Well, no, I got into this because I want to make money, and I'm not going to make money if I'm this is I'm putting my dollars in. So if they fulfill their project, I'm going to get 3x here, 5x here, and so on. And it dawned on me that it when we talk about trading for them, and so I go, so when is the issue for you that all of a sudden you have to move the security from your hands to somewhere else? And it happens not as often as we would like, because we're going to talk about this as we move to the next section, is that in tokenization for trading, it happens only when they need to liquidate for other reasons, but it's not the
Yeah.
reason for the sake of trading. Does that make sense to you?
Yeah, no, it does, it does. And today I see there are platforms out there where you can actually participate in real estate. What they basically do is they give you all these homes in different parts of the country: Arizona, Colorado, and New Mexico, and New York, and Connecticut, and Florida, and all these things, right? And now you can bid on the house, and you can see, but you're bidding on a house; it's right there. And it's one of the things that I've realized, Oscar, is that as I keep saying, I've been a trader myself and an investor, and one of the things I realized is that there's a difference in attitude and perception and behavior for people who think they are traders versus people who think they're investors. So investors look for other ways of benefiting from their investments, not just the flip. You buy something and then it rises and then you flip it, right? I mean, it's like property flipping, but it's a trade value flipping, right? Instead of that, there are people who look for dividend income. They also look for risk management. I mean, think about investors in, let's say they're staying in Florida and the market is going sky high, and they'll say, well, how can I benefit from this one? Or maybe I should diversify. Today, it's not an easy process for the retail investors to diversify into other areas. Now they have to actually bid on independent homes. And anytime you have an independent home that you're owning, even if it's a part of it, there's a risk in not being diversified enough. So, Oscar, I think we're going to see a tremendous evolution in this space where we'll see um, pools of derivatives being created for tokenized real estates, where the derivatives are actually a portfolio based on certain risk characteristics. It's cash flow, income cash flow. Maybe it is price appreciation in other markets. Maybe it is investing or not investing in California real estate, that's subject to mudslides and landslides and torrential rains and so on, right? So I think we're going to see a lot of innovation in this space. And with almost like 60 to 70% of the GDP tied up in all kinds of real estate, both commercial and residential, we have to believe that the potential for derivatives and innovation in this space has to be tremendous. There's no question about it.
No, I agree, but I think we do need to split it up. I mean, that's part of the problem is that everybody talks about the tremendous. So the question is, after
Yeah,
all these years, why do we keep talking about it? Why is there still more confusion? Because I think it is important to understand the different elements where you can use blockchain tokenization in real estate to gain value. And now we're going to move into the last piece, which is the where we see it the most, and that's where the general public sees it. Invest in real estate tokenization because this is the game changer. This is the revolutionary. You can now fractionalize this and that. And I often find myself telling people, well, just so you're aware, fractionalization has always been there. It's always been there for real estate. You're not asking the right question. So it's not like these things did not exist. Blockchain did not open up fractionalization in real estate. It did not open up the ability to have more investors. That was not blockchain. That was the regulation. And what I find the where people need to focus their energy on is to understand why, if it was there, why it wasn't being used, right? It's
yeah.
like
Hmm.
regulation A plus, right? When we tell people about regulation A, we go, it's a regulation that's been there for 20, 30 years. What? Yeah, but nobody used it. Okay, so then you got people like Sarah Hanks, Sam Gusick, who revived it, and boom, now we got a usable regulation that's gaining great momentum. So this is the same example where you know, when you talk to the people in real estate, they've always had fractionalization. Nobody wanted to implement it because it's an administrative nightmare.
Of course, and that is the key thing. Right? That is the key thing. Like you rightly pointed out, these things existed before, but anytime it's administration of it. How do you create that stuff? And if you look at the traditional, commercial real estate market, it's a horrendous process to actually create a holding entity that does that, and to go through the mechanics of the administrative. I mean, it's very chaotic, right? There's regulation, there's tax implications, there's the distribution of the fund, the dividends of the income, all of those things. I mean, it's a horrendous process, and you're so right. It's not as if people don't. Well, let me put it like this: many people don't know about it. The people who are savvy in the accredited investor space, in that space, I think they know about that stuff, but the retail investors don't. And so, I honestly, I think, Oscar, it's a continual education, but the education is going to be effective only because we have a technology mechanism that can actually implement that one. So it's the education, it's the regulation A plus, as you pointed out, and it's the technology, right? It's a combination of those three. It's what I call like the perfect
It
storm.
is. Yeah. It's the technology, and now that we've uncovered it. So we talked about land titles. So everybody should know there's an opportunity there. It will be very impactful. The sooner the better. Obviously, we don't want more people losing their homes. Can blockchain technology, tokenization, be used to manage the asset itself, to be more transparent with stakeholders, to provide real-time reporting, to keep it immutable? 100%. And you add that with land titles, boy, now you got the really, I mean, what's the trifecta? Now you need to raise capital. And this is where it's dear to our heart, because obviously this is the reason why we're holding summits. It's about capital raising. Capital raising is, you can have all the most beautiful technology in the world. That's one bucket. But
Yeah.
then there is the one bucket you need to follow, which is the securities regulators that, you know, have a clear definition on what a security is. And as soon as that happens, then you need to follow the regulation. And this is where because you and I have been on several calls, we're talking to one particular party right now that we're probably going on our fifth conversation. They come from the tokenization world, and they're in real estate, and we're still trying to get them through the hump. There are regulations, and for each regulation, you have to follow different rules. And they're like, "Well, we want everybody to invest." Yes, okay. Now we got to find that regulation that will allow you to do that. And once you do that, you got to follow everything about that regulation from end to end. Who manages, how it's administered,
Yes.
this and that. What are the regulated participants? So, tokenization is been brought out in the open, and I think the last few years we've seen. You know, we spoke to our colleague Lewis Cohen recently in New York, as he alluded to that the first real estate project and all that didn't go so well. And why didn't it? And I think this is a part that I think we need to unveil. So the value of tokenization, if it again, because if it's purely for the trading, it did not
Mhm.
work. Right? We agree on that,
Yeah.
right? We're
Yeah.
100% agreement. Okay. From all the other values of holding the security in an immutable form, fantastic. But obviously, when you sold it on one end, you oversold it. And obviously, people attribute the failure to these real estate projects because it was all predicated based on the trading, and it didn't
Exactly.
occur. Okay, that was number one. Number two, the bucket of audience you could sell it to. And that was another part that everybody just needed to understand, that one thing is understanding what you want to do, raise capital. And number
Yeah.
two, you need to understand the regulation. And then number three, you can get to your goal of who can buy it and all that. And what they ended up discovering is that if they were going to use certain chains,
Mhm.
okay, certain chains that had not gone through the SEC yet, they would only be allowed to work with, you know, what is called accredited investors. And people say it's okay, we can have unlimited accredit. And boy, I don't know where they got that. And it's funny, I got an email from somebody thinking that you can have unlimited credit. I said, no, 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 no. In the United States, the maximum is 2,000 or you become a full reporting issuer. And so 2,000 is the number. And for all of you listening in, one of the reasons Facebook had to go public was for this very reason. They exceeded the number of privately held shareholders. You may recall Mark Zuckerberg did not want to go public. So coming back to here is that 2,000. And for the number of years, people have been, so try to think about that number. How many times could you actually have trading inside? Not very much,
Exactly.
right?
Not very much.
Unless you got 3 companies, 5 companies that bought the bulk of the. So now we're talking about institutional buyers trading among institutional buyers, and that's okay. You can use
Yep.
whatever chain you want and all that, but they then have to ask themselves, are we going to spend $250,000, $500,000 to tokenize this for between us, and when there's really no secondary where we can do that today without blockchain? So the mindset, and this is really important for people to understand, is that yes, you can tokenize, and how you tokenize depends on the regulation you're using. You're going to hear that a lot from us because everything is driven by that, because we need to drive that home. Because it's interesting, after our last event, it still wasn't clear about tokenization in real estate. So Reg D 506C, which is the most common one that everybody uses for real estate to raise capital. Can you tokenize? The answer is yes, 100%. Can you use any type of chain you want? The answer is yes. Go for it. Use whatever you want. Avalanche, Ethereum, anyone that you can find out there. Not a problem. Not a problemo. The question the company or the issuer or the sponsor needs to ask themselves, why? Right?
Exactly.
Why?
Exactly.
Right?
Yeah. I think that is one of the biggest questions people need to ask, and they fail to ask that. I mean, why would you want to do that with a small audience like this, and what benefits does it actually give you? I mean, that's the key.
Correct. And finally, that questions are finally starting to come up in the market. People are finally saying why. And now we're not talking about it. So now everybody's trying to shift. Yeah, no, do you know what? We want to go after everybody. Okay, so now we go to the next regulation, Regulation A+. So Regulation A+ allows a company to raise up to 75 million, a sponsor, and very soon, because of the lobbying that real estate industry has done, it's going to get increased to 150 million. So put your ears on, everyone, and you can have unlimited token holders.
Exactly.
Unlimited token holder. Isn't that wonderful? The
It's
unlimited token
wonderful.
holder.
Yeah,
Right?
absolutely. And
And
it can
you can
include,
issue the.
yeah, and
Sorry.
it can include the accredited investors too, right? Nothing preventing that.
Exactly. Accredited and non-accredited. Thank you, because I missed that part. Yeah, good point. Accredited and non-accredited. And because it's real estate, if you want to offer a dividend, that can be on the chain as well,
Right.
to make sure that the everything is being done appropriately. So now the question is, now I know, yes, that's what I want. Okay, good. Now we know the regulation. Now you know you want to reach the general public, everybody over the age of 18, to come and invest in your real estate project. Okay, great. Now we get to work. So what do we need? Well, if we're going to tokenize this, the only question you need to be asking the vendor, and it's a really simple question, it's only, have you gone through the SEC? Have you submitted? Has your technology been submitted to the SEC for a Reg A, where your blockchain technology and your token or your infrastructure has been qualified for the company to issue the securities and tokenization? That's the only question a sponsor needs to ask. That's it. It's a really simple question. That question will give you the answer that you're looking for. Why? Because if they have, then you got a very easy path going forward. Lawyers will still need to formulate your Form 1A and make reference to the previously published documentation in the documentation. You still go through the audit and all that. Those will be standard items. So that's easy if the answer is yes, like KoreChain is. Number two, if you haven't, can you still go through it? The answer is yes. I certainly do not. We are not here to discourage anyone. So what does the sponsor need to understand for that process to occur. So now is the beginning journey to bring to the attention of the SEC what your intentions are and how you're going to use this blockchain technology. Many have tried, many never get it qualified. Many have tried and tricked the SEC and try to put it there later, and they've regretted that. But one way or another, the company and the provider need to submit their application into the SEC to get it qualified. Otherwise, you cannot use that particular technology. It could be the best technology. You know, I get emails the other day saying it's fully compliant. It does KYC, ID, AML, and that's fantastic. I think that's a great first step. Next step, you need to go into the SEC and have it qualified with an issuer. Someone's got to pay the legal bills in order to make that happen. And it doesn't need to be that expensive. I'm not suggesting it's going to cost millions, but it is going to take a little bit of time. And both the company and the provider need to be ready to answer questions. Do you recall the back and forth we went through?
Oh yeah, no, absolutely. And I think I think people would benefit from understanding just as a ballpark the range of the expense in the Reg A process for registration and going through the front door with the SEC. What might that look like, Oscar? I think there's some interest in knowing that.
Well, I mean, look, we can only give you our experience, and there's excuse me, there is a lot of documentation you need to have ready. You need to give them they're going to go through every step about the chain, the nodes, the token, how they're managed. If you're using wallets, and you bring up the wallet fias element, and that opens it up even further. You may recall, I mean, we spent a lot of time going through that, even though we don't have a wallet, but still they went through their 30, 40 different questions they have there. And that's just on the chain. And then because you are using this blockchain technology, where is the SEC registered transfer agent? Where are they in this equation? And where's the FINRA broker dealer in the equation? Because they're all integral for the qualification process. So it is a lot of questions. The one that's going to get hit the most in the questionnaire is the transfer agent, as to how are you going to manage this? How is this different from your current book of records? Are you going to manage this any differently? So, and that becomes a real problem, because depending on what chain you're using, you could be in a situation where you have two sets of records. And if anybody knows anything about accounting, two sets of records is not a good thing.
Certainly not. That is not what double entry bookkeeping means.
I was just going to say that's a really good. So the important thing here is that we understand that that process is going through the blockchain technology, and that could go back and forth, and you'll work with your lawyer and constructing that element. There are great lawyers out there like Lewis Cohen, Andrew Bull, some really great lawyers out there that understand the space extremely well. And that if you are a new chain and you're trying to get a qualified bill, but someone's got to be ready to pay the bills in order to get it qualified. Obviously, the lawyers are not in a situation going one way or the other. So, and then once you get through the chain, they're going to go through all the providers to make sure that, and along the way, a decision is made. Sometimes this process can take months, years. I mean, our process took almost 2.5 years. I'm not suggesting it would take anyone that long, but obviously now going forward, anybody submitting a Reg A. So it's a really good question. Someone's asking, what does a Reg A typically cost, and when you're using it for for real estate? So I'll mention real estate, and then we'll add the tokenization so you can see the math. So in real estate, typically lawyers who do real estate, firms like KBL Law, Red Rock Securities, CrowdCheck, Bellevue, crowdfunding lawyers, great lawyers, they're charging flat rate for real estate Reg A. Okay, flat rate real estate Reg A, which means that anywhere between $50,000 to $75,000 flat rate. There it is. That's your standard. Boom. The audit is your next cost you need. So if you're a brand new project, you're looking at an audit cost of around $4,500, $5,000. Firms like Assurance Dimensions can assist you really quickly. They specialize in Reg A and real estate, so very quick. So now we got them done. What do we need next? We need the broker dealer. So there's a fee. They're going to charge you a commission fee for doing the offering, anywhere between 1% to 3%. There is some filing fees you're going to have to pay for the 5110. And that's anywhere between, it could be from 10,000 to 20,000. It all depends on how much money you're raising. And then you have the SEC registered transfer agent. They're going to charge you a monthly fee, and of course with the technology that you need to raise the capital. And that's your typical capital raising Reg A real estate today. Souped out, there it is. You can get up and going. Now you want to tokenize. Okay, so using the KoreChain infrastructure with KoreConnex and its providers, the tokenization is at no additional cost. There is no. So I just want to make stop laughing. I know
that was certainly a very that was certainly a very suspenseful moment. Well, how much does it actually cost, right?
Yeah, I know. What's the additional cost? We don't. Why? Because it's a Reg A. It's already, we created the smart contract. It's already there. We have the transfer agent, Core Transfer USA, that manages security. KoreConnex, you use the KoreConnex issuance technology that will sit on your website and then of course the FINRA broker dealer will be provider compliance test. All of this is of course completely private label, but because you're asking the question, I'm answering. I've never done this before, providing all the details on it. But since you're asking, so that's if you're using the KoreChain infrastructure with KoreConnex, and that's gone through the front door. If you want to go another approach, same thing, all the other costs, legals and all that. So what is it going to cost if you're going through another chain? And the numbers are not mine. These are numbers that companies have published. It can cost a company anywhere between, just to go through the legal review of the SEC, it can cost you an additional, $500,000 to $1.5 million. So now lawyers have done this enough times, they get better, but there is a fee there. The additional cost is them creating the smart contract and the mining and all of that. Those costs do not exist in the KoreChain model, but in the other models it does. So those are the two ways that the broker dealer, and a sponsor needs to look at everyone. So then the final question, you go, well, Oscar, I like this because you can go and trade it. Well, so you can do here. There are secondary market platforms like Rialto Markets. They can trade tokenization. North Capital trading ATS. And then there's Texture Capital. Then there's Oasis. There's T0. So there's a lot of regulated secondary ATSs to allow the trading of these securities for Regulation A+. So and Templum, my apologies. So there is no shortage of that. They're not crypto exchanges. They are registered secondary ATSs, right?
That is a very important point, Oscar. I mean, I think you kind of mentioned that casually, but can you provide a little bit more of the regulatory and compliance protections or requirements between what is traditionally called a crypto ATS versus a registered ATS for digital assets like this? I think that would be very helpful for people to understand the distinction between the two.
Yes, the market, I know people who come from the token blockchain or the public chain, everything should be under one. The problem is that a crypto is a commodity, which the SEC regulates, but the SEC also regulates securities. And a security under the Howey test it's very different than a commodity. And therefore, there are different rules created to protect the investor. And so when we look at Regulation A+, the regulators wanted certain things in place. They wanted a FINRA broker-dealer to do the ID and AML and suitability of every investor coming in, even though the individual could be a non-accredited, and they wanted to ensure that everything was brought on properly. They wanted an SEC registered transfer agent to manage the book of records because Look at that. You're going to have 10,000 token holders in your company. You want to make sure they're being properly managed and being taken care of
Yes.
at any given time, that the book of records need to be provided, and so on. And then, so that's for the primary. That's what we call the primary element. You're raising the capital. I raised 75 million for my real estate project. There it is. Now my token holders in my real estate project can now trade those tokens. So the regulators created additional rules for secondary. And so they've split up primary to secondary. And what does that mean? Well, it means that number one, the issuer, the sponsor needs to acquire what is called a trade check report. What does that report do? It lists them on the National Securities Manual to make sure that they can sell their securities in the general public for secondary.
Mhm.
The two that registered in all states for Blue Sky. So this has been a bit of a confusion over the years about, people say, well, Oscar, Reg A give you Blue Sky exemption. Yes, for the primary, not for the secondary.
Not
It
for
was an
secondary,
oversight.
exactly.
It was an
Yeah.
oversight, as you remember. We had Commissioner Pierce in one of our discussions with Sarah and everybody else. There was a bit of an oversight, not deliberately, of course, but but now obviously there's a lot of groups lobbying to get that boost up, but it's not there yet. So until it's there, this report is required. So that's step number one. Then the sponsor needs to sign an agreement with a listing, an ATS. And by the way, the securities do not need to physically go and trade at the ATS. They can actually happen on your website. So I want
Yeah.
the sponsor to visualize in your mind, wait, what are you saying, us? Yes, the investor can come and invest on your website and then trade on your website fully compliant, making sure you have the FINRA broker dealer and the FINRA secondary ATS there in the transfer agent. All of that can work. The technology is there now to give you that power to be there rather than being sending people all over the place. So once the issuer, the sponsor has paid all those fees and all that, then the investor is ready to go. And when the investor is ready to start trading, they also need to go through a little bit of onboarding for secondary. The regulators created
Yeah.
additional questionnaires. So again, all of this, you said it, it's about investor protection. They wanted to ensure, are they onerous? Not at all. Can this
No,
be
no,
managed on a
no.
chain?
Yeah.
Great.
In fact, Oscar, I just want to double click on something that people understand this process, right? So if anybody has done, like I have, just to look at this entire process on the public side of it, the public chain, the process of trading in the public chain is horrendously complicated and onerous, believe it or not, right? If you only do the most popular Bitcoins and Ethereum, that's fine. But anything else, if you have a wallet under one registered and then connected with one ATS, or one of those platforms, to transfer that and trade in something else, you'd have to go through multiple gas fees. You have to dispose it off here, transfer it there, rebuy it there, and then trade there, right? So it's I just don't want people to minimize this and think it's easy. It isn't. That's the reason why this entire infrastructure that, Oscar, you and I, we talk about, we engineer this whole thing, is much more fluid, where you don't have to do this. You don't have to pay miners. There's no other risk in that entire process, right? So I think that's one of the big advantages that people really miss.
They do. They miss that part, and it's a very important part in the equation
Hmm.
that takes place in all of this process with the with with the regulations. And I know some people go out, with all of this, it's not even worth it. No, no, no. I'm going to tell everyone right now, everything we've said is so simple to do. It's not difficult. And anybody who's engaging in the tokenization space and you're in there and you want to
Yep.
reach out to us, reach out to our ecosystem. We're here to educate. We're not here to look. When people say, "Well, you guys are the only one, you're the only shop in town," no, we're not. We're just showing you. It's a public record. You can go to Edgar, you can Google KoreChain, and you'll get the data. You will see what we had to file in order to get something qualified. And I believe everybody else can do it. It just requires work. That's it.
That's
You
right.
got to put in the time. And once you do it, we dismiss all the other, because we have to face the reality. The SEC has said, we're not changing anything. The rules are already there, and I agree with them. The rules are there. The rules are there. Therefore, follow them. So, can you use technology to make things efficient? And I say yes. The same way
Absolutely.
that anybody that's on today listening on, that the way we're using AI technology. We're using AI technology today to make us more efficient. How we're calling it? An assistant. Okay, great, an assistant. So can we get blockchain and tokenization to assist us to make it easier for our clients to token? Of course, but the value has, but you still got to make sure that you cover all the bases. And by the way, I do want to add this into this discussion today, which is it's come up before. Oscar, I'm just going to move into healthcare. It's a lot easier. You think securities is a
Ooh.
nightmare,
I'm
right?
sorry. I have to laugh at this one. I mean, anybody who says that, I'd be happy to sit down with them and walk them through the healthcare ecosystem process. It's unbelievable. I actually wrote, two chapters in a book recently. They asked me to write about this, how to use blockchain for the healthcare. Man, I mean, that's an entirely different ball of wax.
But that's the point, right?
Yeah,
It's
exactly.
you and I. People are making these assumptions, and then what they're doing, they're hopping between. And we've seen this firsthand. We've spoken to companies that they raised a ton of money. Oh yeah, we're going to go into healthcare. We're going to revolutionize. Then they start digging in and go, oh, we're not going to be able to do that. No, you can't. You can't remove these privacy laws. You can't remove these guardians that they put in there. So why are they there? There's a question that we're going to evolve here. Why are these things there? And I know what people in blockchain may not all. I'm not going to categorize everyone, but some would say that hey, blockchain can solve all the problems. The answer is yes, it can solve a lot of the problems, but we are flawed in one way. In one way, do you remember when we were having the discussion regarding NFTs?
Yeah.
And the NFT is here's the Rolex watch. See, here it is. It is, it and it's now on NFT. You can own a fractional ownership of this one of a kind rare Rolex watch. Okay, and everybody's so excited about, oh yeah, look, I got it. But there's one question everybody forgot to ask: who validated that that's a real Rolex watch?
Exactly. And that's the whole point.
Right?
Uh-huh.
And that's the whole
Yeah.
point, right? So
Yep.
safety guards were put in place long before blockchain to regulators anticipated this, not securities law, but also banking laws, healthcare laws, privacy laws, state
Yep.
law. And can we remove them? The answer is no. They're there for a reason. They're there to protect even you, your household, your family, your children, and so on. So we need to respect it and then apply it. The more you fight it, the more it doesn't go anywhere. And then once you start applying the rules, can the rules be modified when you start demonstrating the efficiency of the technology? And I believe the answer is yes. That is where I believe where we head next. Because look, we all live we're in the 21st century. The 21st century. I look at a computer today. A computer is this size. A chip, it's even smaller than this, right? It's even smaller than
Oh,
this.
absolutely. Yeah. Mhm.
When I first saw the first computer in the early 80s, the board was this big. The chip,
Yeah.
and it even do anything. And we're still driving cars with wheels. Okay, we're still in America. We don't have a high speed train that goes faster than 150 kilometers an hour, right? So
Right.
it means that we need to understand that things do take time. And yes, we all want to hurry things, but keep in mind why things take a little bit of time, because we want to make sure everyone's protected. So if you get everybody involved right off the get go, so anybody listening in today, if you're doing a real estate project and you want to tokenize, make sure you have the right lawyers on the call, not your real estate lawyers, have securities lawyers on the call as well to give you some guidance to make sure you're proceeding this forward. Number two, when you're selecting your vendors for your blockchain technology, ask the right questions. The question you should be asking is, have you gone through the SEC?
Right.
I'm not suggesting they're not providing you something that's compliant. I'm just, you got to ask that next step. And then the last one you got to ask yourself depending on what regulation you're using, why am I tokenizing? So we're going to spend a few minutes on this. We're going to go a little over. So here is the thing that even I've given all the merits of tokenization. You and I are dealing with real estate today.
Yep.
And you brought us some interesting statistics on some of our real estate clients. The age group, they're all over 40. That's interesting.
Yep.
And they're investing pretty heavy. And not a single one is tokenization. Not a single one of our real estate clients is mentioning that. So the real question is, and we've been asking clients this, and I know I heard you ask, are you tokenizing to attract that crowd, or are you tokenizing to make it prettier for this crowd that doesn't have it? And people are screaming, why are you? It's an interesting question, isn't it?
Of course it is. Of course it is. Yeah.
Right?
Yeah, no, absolutely. And the risk profiles of how people view investments in this particular area is going to be drastically different across various age groups and different communities, right? I mean, you have, we have seen some younger populations also invest in, real estate securities and tokens and all that. But they don't necessarily come from what we call necessarily the crypto community. It's not necessary that they do that, right?
Correct. Yeah, they don't need to do that, but it is. I think those are the fundamentals that people are needing to ask themselves. And people go, Oscar, I want to go after the crypto market. Okay,
Yeah.
So the question is the crypto market looking for your asset? And that's a question nobody's been able to answer to date, because that's a very different beast, right?
Absolutely. I think we're going to
Yeah.
see a shift, in the dynamics of this one. I think, there are still a few people who are simply just hung up in this entire complete decentralization, no big brother, no Uncle Sam kind of crypto space, which is not necessarily bad. I mean, it's driving some innovation, I'm sure. But many people are now shifting and saying, hey, wait a minute, we want to be more compliant. We want, security. We want safety in how we hold these assets, right? I mean, that's we're seeing a shift in that dynamic.
No, I agree. I think, but like I said, those are the questions you need to ask. You may not like to hear the answers, but these are the realities in order to make sure that, as a sponsor, you're spending the dollars and the hard-earned
Yeah.
to attract an audience that may not even be interested in real estate. And that's it. Because the crypto world is about trading, things. They're trading commodities. They're not trading, and you're going to change their behavior. You cannot bring, and that's the part that I recently got into someone. I said, it's a different behavior. What do you mean? It's not the same behavior. You're trying to bring a crypto investor who's used to going into these crypto exchanges, which is very different, very fluid, back and forth, wallets and all that. Once you go into here, that's gone. That now it's a security. You need to follow it. So the real question then is the current investor investing in real estate, which are trillions of dollars, are they interested in, tokenization? I don't know the answer. I think they don't. To them, what they care, I put in $30,000. Where's my 30,000? I need to see that it's there.
Exactly.
And where's my dividend? Am I
Where's
getting
my
my
dividend?
monthly dividend? Right?
That's right.
And where's my K1s?
That's right. That's the other big one.
Right? Where's my K1? Where's my K1? So it's tax, getting my cash. The fact that it's on a blockchain technology and all that doesn't even clue to them yet. They don't. Where they'll see the value of that is when they need to do something with it, but immediately and they're not even thinking of exit. They're just thinking of making money.
Exactly. It's just like, people don't have to know and ask, in which database their accounts are being stored in the bank. I mean, who cares? They don't care about that part. But once they do the transactions, if they're ever told by the bank, oh, we're maintaining paper records, so it's going to take like 30 days to settle something, that's when they care about. That's when they worry about. Say, wait a minute, why do you guys not on a modern database? Right?
Exactly. Oh my God. So again, this is why we're talking about real estate, because over and over again, there's little nuances that are coming up all the time. And this time we dug into a little bit more deeper regarding specifically what it entails to do tokenization of real estate, because we're finding ourselves now 2-3 times a week repeating ourselves with the same. And I
Exactly.
hope that this was helpful for everyone. Thanks again, Kiran, going back and forth with me on this. And our goal really is to open it up and to make sure that people do it compliantly, to make sure people know that there are choices. Certainly not saying that it's only one, that's it. But when you engage, ask the right questions. I've learned that this is one of the biggest pieces that we can give you, asking the right questions. And if you do that, you're going to have a successful race. Because what matters now, if when you're doing tokenization, is not whether you raise the money. People ask me, what do we consider a successful race? You keeping the money.
Absolutely, absolutely. And I just want to offer one concluding, I want to share one thought. My advice to people, and I know it's yours too, is never confuse slipperiness for fluidity. We want fluidity, but we don't want a slippery slope. There's a difference between the two, right? And I think we're sort of been emphasizing the importance of safety and compliance in how we do all of these things.
Appreciate that. That's a great last point to everyone. Till next time, everyone, thanks for being with us today. We really enjoyed having you. And again, apologies for last week. We hope to see you very soon. Till next time, enjoy your day. Cheers.